Hello guys, welcome to Bhavna's Online Academy. So in this video, we are going to learn the accounting standard 9, that is about your revenue recognition. Okay. So if there is any company, any company in the world or any person who is running a business, they would run it with a motive to earn revenue and earn profit only. Okay. So their main motive would be to earn revenue. So before starting with the standard, I would like to tell you what is the difference between revenue and what is the difference between revenue and income. Okay. So revenue means revenue is that part of the money that is being earned from the core business activity. Whereas income is the money which has been earned by the company through different forms. Okay. So using the core business activity, if you are getting some money, that will be named as your revenue. Income means income includes all the sources, including from whatever money you are getting from core business activity also and from other sources also. So all those included will become your income. So here what will happen? Your income includes revenue. Your income is including your revenue part only. Okay, so this is the thing that you have to understand before we get into the standard. So revenue recognition AS9, who is it applicable to? So it is applicable to all the entities and it is also AS which is mandatory in nature. Okay, fine. So now here what they are telling is in a business revenue, what is revenue means? Revenue means, like I told you, nothing but money that a business earns from its core activities. So revenue means inflow of cash and receivables. So if it is in credit, they will have receivables. If it is done in cash basis, they'll receive cash. So depending on that, whatever the inflow they get, that will be named as your revenue. This cash inflow or receivables you can get from three kinds of activities. One is sale of goods. By selling goods, you can get revenue. Second is by rendering of services. By giving some service, you can get some revenue. Third is in the way of interest, dividend or royalty. Okay. So first, if we take the example of Reliance Trends, they sell clothes and get money from that. So that will be the revenue of Reliance Trends. Rendering of services means if you go to a natural salon example, they will give you some service of haircut or facial or something like that, and by rendering those services they will earn some money. So for that natural salon, this will be the revenue. Then there might be a few individuals or a few entity, how they earn their core money or their money from their core business is that the revenue from their core business is itself interest only. Like what will be that individual's work will be that he will have a lot of money, so he will give that money to a lot of other people. Like this is his main business. He'll give money to other people and by giving that money, he is going to earn interest from that. This is his core business. Second type of individuals can be people who earn royalty. So in royalty means what they will do is they will have some, they will make some technology or things like that on which they can earn royalty, and that they will give to other people, and on that they will earn royalty. So this is their core business. Third type of people might be that people who have invested in different companies and whatever money they get as dividend from those companies, that will be their main revenue. So their work will be to invest in other companies and earn dividend from that. So relating to core business, so depending on whatever your core business activity is, you will earn revenue. Okay, that core business activity only they have divided into three parts. One, you can either sell goods and earn, or render services and earn, or in the form of interest, dividend and royalty you can earn. Okay. So AS9 does not include a few kinds of revenue. It does not include a few kinds of revenue. I already told you, whatever you earn from your core business only, it is going to include. So the income that you earn other than from your core business, that will not come under this. Example, if you sell fixed goods, or if there is any exchange difference, or if there is any holding gains or remission of liabilities, means settlement of liabilities. So settlement of liabilities, how it can be income, first I'll explain it. So in case if in your book you have 30,000 creditors, you have paid 28,000 only, you have paid 2,000 discount they have given you. So 2,000 here is your income, but it will not come as your revenue. Okay, that is your income, but it will not come as a revenue. In your books you will record it as income, but here it will not be the revenue. Okay, so any income that is other than your core business activity will not come here. I hope that is clear. Yes. So revenue recognition. So now we are going to study about revenue recognition. What is revenue recognition? So now until now we understood what is revenue or from where we can earn it. Now we are going to talk about RR. That is the recognition part also included. So when will you recognize the revenue, or what is revenue recognition? Revenue recognition means the timing of recording the revenue. The timing of recording the revenue in the normal course of business. In the normal course of business is your revenue recognition. So our normal course of business is to sell, suppose hide and seek biscuits. Our normal course of business is that we are the sole traders of hide and seek biscuits, and we sell hide and seek biscuits. So now, when will I record revenue? What will be the time that I record the revenue? Is that if hide and seek biscuits have come to my store from the supplier, at that time will I record my revenue? Or whenever a customer is seeing the hide and seek biscuit, with that time will I record the revenue? Or whenever I sell the hide and seek biscuit, at that time I will record the revenue. So at what time will I record the revenue? Or in case of if there is any delivery of goods that I have to make, that means a customer has ordered around 5,000 packets of hide and seek to their home. That means at the time when they call and place the order itself, will I record the revenue? Or once they receive the goods, will I record the revenue? Or when I make the delivery, will I record the revenue? So there may be different kinds of situation, right? So in a normal course of transactions, what is the timing that you're going to record the revenue is what we are going to understand here. That is what is standard about revenue recognition. Okay. So first we are going to see in the case of sale of goods. First in the case of sale of goods. So here when you are selling any goods, you will recognize the revenue if all the following conditions are fulfilled. So there are 3 conditions. If you fulfill all these 3 conditions, that means at that time you can recognize your revenue. First is the ownership of goods must be transferred. First is the ownership of goods should have been transferred to the buyer. That means whoever is buying, the ownership must have been sent to them. How is ownership usually transferred? So ownership usually gets transferred through invoice. But once you issue the invoice to the buyer, at that time itself, it means that the ownership of those goods have gone to the buyer, because now for the invoiced goods, you will not sell it to someone else, right? So at that time itself, ownership has got transferred. Next is risk and rewards. So risk and rewards here means generally whenever whatever the risk related to the goods or whatever the rewards are related to the goods, if you have transferred, which are incident to ownership, that means it establishes ownership in a way. At that time, you will take it as a sale of goods, that one of the condition has been satisfied. Okay, so here how will the risk and rewards get transferred? It will get transferred by the delivery of goods. So first you invoice issue, then you do the delivery of goods, and then third, whatever goods you have invoiced goods and whatever you have delivered the goods, for that you must have certainty. No uncertainty here means that you must have certainty that about your consideration and collection. That means whatever amount you have to receive in relation to the sale of goods, you will definitely receive it. So there must be certainty about its collection also. So these are the 3 conditions. 1, ownership should be transferred. Risk and rewards incidental to the ownership should have been transferred, and you must have a certainty that you will be able to collect the amount which whatever is the consideration, you will be able to collect it. So if these 3 conditions are satisfied, then in such case you can recognize the revenue for sale of goods. Next we are going to study about rendering of services. So for rendering of services also, same way, if the following conditions are satisfied, you can record the revenue. First is the services, whatever is there, it should have been performed. If the services are performed, then in such case you can render your services. So the services whichever are there, they can either be rendered wholly or partially. That means the performance of service is there, no? Whole service they could have rendered, or only partial amount of service they could have rendered here. So here how will you recognize revenue? So here revenue recognition will depend on what kind of method you are following. Are you following complete contract method, or are you following percentage completion method? So depending on that method, you will recognize your revenue. In case if you're following your complete contract method, then in such case, complete contract means full contract completed. That means whenever your whole performance of the contract is completed, at that time only you will record your revenue. Whereas in terms of percentage of completion method, basing on the basis on the portion of services rendered. So if there is percentage of completion method is what you are going to follow, then in such case how much percentage of service has been rendered, depending on that the income can be booked. I mean revenue can be booked. Suppose if you have completed 50, if you have taken a service rendition, that you have to perform a service, and for that they are going to give you 10 lakh rupees. Then in such case, if you have rendered 50% service, then 5 lakh rupees you can book. So depending on the percentage of completion, you can book your revenue here. So that was your first point. Second point that you have to fulfill is that there must be certainty. No uncertainty means there must be certainty that the consideration you will be able to collect. Whatever consideration is there, you will be able to collect it. So if these both conditions are satisfied, you can recognize your revenue. Next is revenue from dividend, interest and royalty. So revenue from dividend, interest and royalty. So here also if the following conditions are fulfilled, you can recognize your revenue. First, there must be certainty about the consideration and its ultimate collection, that you will be able to collect the amount. Then there are few specific conditions in relation to these three. If it is a dividend, that means the right to receive the dividend should have been established. That means when will the right to receive the dividend be established? What will happen is that the company will say that they have declared. Okay, so what will happen is company will declare in its general meeting that they are going to give dividend to the shareholders. So in such case, if such a general meeting has happened and the management has declared that they would be giving the dividend, then in such case the right to receive the dividend has also been established. So at that time you can book your revenue. Next is interest. If interest income means if the time period has expired. Time period has expired means your time proportion basis you are going to book your interest. Okay, depending on the time and whatever you have decided, on that basis you are going to book your interest. Next is royalty. So in relation to royalty, depending on the agreement, if whatever the conditions of the agreement are satisfied, then in such case you will book the revenue in relation to royalty. So depending here, it depends on the agreement only. Okay. So these were the major cases. But there are two more cases on which the question can be asked. One is in relation to insurance claim and price revision. Insurance claim means there has been occurred a fire. Okay, and in relation to that, you have some insurance claim. So insurance claim you are going to receive, right? So that revenue when you will recognize. The same if there is a price revision that has been happening, that means you have what has happened is the prices have been hiked up or hiked down. So if it has been hiked up, then you have a revenue in that case. You will get the income in that case. That means the price has been increased. So in such case, that revenue when you will recognize, it has been asked here. So the collection and the amount should be certain. So if it is certain, then in such case you can recognize your revenue. Okay. So is there any disclosure requirements? What you have to do is whatever revenue recognition policy you are following, that you have to disclose in your financial statements. The same way, if there is any major revenue but you have not recognized it, okay, that means whatever the facts are there in relation to that also you have to disclose, like why it has not been recognized until now, because it is a very major revenue, right? So it can affect the economical decisions of the users. Okay, so that's the reason they are saying this here. So this was your whole AS9. So now what we are going to do is we are going to quickly go through all your ICAI illustrations so you understand better. So illustration number 1. So in illustration number 1, what happens is there are board of directors. Board of directors on 31st March 2012 will take. On 31st March 2012, they have decided that they would increase the sale price of certain items. That means this is a case of price revision we already read, right? Price revision. So they have increased the sale price of certain items, but they have increased this retrospectively. Means retrospectively from 1st January 2012. So this decision they are taking on 31st March 2012. But the prices, this increase in sale price of certain items, they have did it from retrospectively, that from 1st January 2012, from that time whatever goods you have sold, for all those goods also there will be an increase in price. So what will happen due to this price revision from 1st January 2012, the company has to receive 15 lakh from its customers, for which it has made sales between 1st January to 31st March. So in this time period, it has made a sales of around it has made sales, and in that relation to in such sales, because of the price revision, now the customers have to pay extra 15 lakh. Extra 15 lakh rupees. So this extra 15 lakh rupees, here they are telling that the accountant cannot make his mind whether to include this 15 lakh in sales or not. You have to advise. So here this 15 lakh rupees should be included in your sales amount. But when will you recognize recognize this in the sales amount? Here what they are asking is specifically the sales for 2011-12, that is in the current period sales, will you recognize this or not? So here what they are telling you is, if the ultimate collection, you are able to, if you are able to assess that the ultimate collection means the money, you will receive it with a reasonable certainty. If you are able to judge that you are certain that the money you are going to receive, then in such case in the current year itself, that is additional revenue, you can recognize in the current period itself. If you are not certain that you would receive all the money, then in such case how much ever money you are going to receive, you are certain that you would receive, that you can account. If you are not certain that any amount of money is going to be received, then whenever you are certain, at that time you can book your revenue. Okay, I hope that is clear to you. Next, illustration number 2. So in illustration number 2, they tell you that there is Y Limited. It used certain resources of X Limited. In return, X Limited, what it did was that it received 10 lakhs and 15 lakhs as interest and royalty from this Y Limited. Okay. So during the year 2011 and 12, you are required to state whether and on what basis these revenues can be recognized. So first common condition would be that both must be, there must be certainty that you are able to collect the money. Okay, you must have certainty about the collection. Okay, so if there is certainty about collection, then you can recognize. But specifically, 2 more conditions also you have to fulfill. So in case of interest, you are going to do it on a time proportion basis. Okay, so depending on whatever the amount is outstanding and whatever the rate is applicable there, so depending on that you can calculate whatever interest is whatever is interest is pertaining to the time, and in such case you can record your interest income. The same way royalties also, on accrual basis you can record that. On accrual basis means as and when the terms of the relevant agreement this X Limited is fulfilling, yes, this X Limited is fulfilling. Depending on that, they can do their royalty, booking. That is, that income they can book in their, what do we say? Income they book in their books. So here, what will be the ultimate answer? First, you must be certain about that you will collect the money. For interest specifically, depending on time proportion, you can book the revenue, and for royalties, depending on as and when you fulfill the contract conditions, agreement conditions or terms of the agreements. In such case, you can book your revenue of royalties. Okay, so that was about illustration 2. Illustration 3, they tell you that this is in relation to insurance claim. We read one insurance claim condition. This is in relation to that. So what happens was a claim was lodged with railways for a loss of goods of 2 lakh rupees. So you are a customer, when you were traveling from railways, what happened? You lost 2 lakh rupees of goods. Okay. So for that you have lodged a claim. Okay. And for that claim, a payment that, when was that, one second. When was that claim lodged? The claim was lodged in March 2011. And in relation to the claim that was lodged in March 2011, you received a payment in March 2013. 2 years later, that also for 2 lakh rupees, you received only 1,50,000. What they are telling you here is, no entry was passed in the books of the company when the claim was lodged. So for the financial year, that means on year 31st March 2011, they did not pass any entry in the books in relation to this claim. Okay. So here what they are telling you is, advise PCO Limited about the treatment of the following in the financial statements year ended to 31st March 2013. So as on 31st March 2013, what should be the treatment is what they are asking you. Okay. So here what they are telling you is, first you have to assess the ability that the ultimate collection is reasonable. So if your ultimate collection is with reasonable certainty, if you are able to say that you will collect the entire amount or collect the amount, then in such case you can recognize your revenue. Here what happened was this, on 31st March 2011, maybe they were not sure. PCO Limited, they were not sure that they would receive this 2 lakh rupees. That's the reason they did not, pass an entry for the same. Okay, because the collection might have not been certain. Okay. So here what happens is that so here what will happen is that this 1,50,000 rupees, whatever revenue is there, since now you have received, that means the collection has been now certain. So now you can book it in your book. So what will be the treatment is that you can book it as a revenue in your books. Here what they are telling you is that this is not a prior period item. This is not a prior period item. And in the light of AS5, it will also not be treated as an extraordinary item. It will also not be treated as an extraordinary item. However, AS5 what it states is that whatever items of income and expenses, okay, within the profit or loss from ordinary activities are of size that the disclosure is relevant to explain the performance of enterprise. So in case what they are telling is whatever now 2 lakh rupees income you have got, right? So due to this income or expense, what happens is that this income or expense of 2 lakh rupees, if it is explains the performance of the enterprise for the period, because of this 2 lakh rupees, it is a huge, if it is a huge amount to your company, and because of this 2 lakh rupees, your performance of the enterprise of the period can be explained. Then in such case, you will disclose this. That means you will disclose it. This is what they tell in AS5. So here what happens? Here you will disclose the item separately. So here what they are telling is you are going to disclose this item separately. Okay. Illustration number 4. So in illustration number 4, what happens is that XYZ is there. It supplied goods on consignment basis to ABC. Okay, so here what happens when there is a case of consignment. So what here this XYZ is the owner of goods. So this owner of goods sends the goods to consignee. So the consignee is able to sell it to the third party or the customers. So here you will have to book the revenue only when the goods have been sold. Okay, so that's when the collection is going to be certain, right? So that is when you have to, usually in the case of consignment, you will book the revenue. Okay. So here ABC is a retail outlet and the goods that have been sent to ABC are worth 10 lakh rupees. Okay. So ABC will only pay XYZ for the goods which are being sold by them to the third party, and for the rest of the goods which are not sold, what they are going to do is they will just return back to XYZ, and there is no other liability in relation to that goods. So if they sell the goods, they will pay that money to ABC. I mean, ABC will pay the money to XYZ. If they did not sell the good, they will return it back to XYZ. Okay. So here ABC, out of the 10 lakh worth goods, ABC has sold around 5 lakh 50,000 worth goods, and the rest are lying in the store. They are telling which may get sold in the next year also. Okay. So here you are asked to advise XYZ, that is the owner of the goods, that how much revenue it should recognize. So here for consignment, the risk and rewards are not transferred to the customer on just of delivery. Okay, so here what they are telling is that this risk and rewards which is there, this risk and rewards whichever is there, it must be transferred. Okay, so whenever this risk and rewards are transferred to the customer only, you will be able to record in your books. Okay, here what happens? Here no revenue should be recognized until the goods are sold to third party. So you will only recognize the revenue worth 5,50,000 here. Okay, so yes guys, that's it for the videos. Hope you found this video helpful. In case if you did, please make sure to like, share and also subscribe to the channel, and don't forget to click on the bell icon so you get notified every time I post a new video. Thank you.